Good morning, everybody. Good morning. Happy Monday, all you magnificent melonheads of the world. Today's September 9th, 2024. And the top story this morning is big retailer, Big Lots. They are biting the big one. Big Lots has filed for Chapter 11 bankruptcy protection in court this morning, announcing a $707 million stalking horse bid from Nexus Capital Management to see the company through bankruptcy proceedings and to take over the company. That is the latest in a long string of retailers that is going through hard times. The first major retail bankruptcy of the year, but certainly we've seen a lot of other retailers have really been struggling here. Big Lots runs 1,300 stores around the country. That's down slightly from 1,425 a year ago. They've had a 2-year losing streak of negative earnings and store closures, ultimately culminating in this bankruptcy proceeding, which was just announced this morning. So that stock is obviously taking a nosedive on this news. Also going on this morning, we got some inflation data out of China, and it looks like the deflationary spiral in China is continuing here. Now, their consumer inflation rate came in at 0.6% year over year. So they do still have consumer inflation, albeit just barely, but it was that producer price index that really caught my attention. PPI came in at negative 1.8% year over year, and PPI has been negative for almost 2 consecutive years in China right now. The deflation is just continuing there, guys. China's got a $30 trillion property debt bubble that is going burst despite Chinese government efforts to try to slowly deflate that bubble. It is still bursting. Nobody's paying for any of these buildings. I mean, all these buildings have owners. They're full of apartments, but nobody lives in them. 65 million vacant apartments in China with another 20 million that are already sold that haven't been built yet. And all of that debt starting to go belly up at the same time. That results in money destruction. That results in economic contraction, which results in job losses, downward pressure on wages, and ultimately you end up with deflation. And when you've got a $30 trillion debt bubble, you can't afford deflation because the dollars you owe, or in this case, the yuan you owe, become even more valuable, means you'll never get out from under that mess. So it does have a way of taking on a life of its own. So deflation is continuing in China here this morning. And we've got big news closer to home. Today is Apple's annual fall product event, and they're going to unveil the iPhone 16. Now, if you're tired of lackluster innovation over at Apple and more cameras, bigger cameras, titanium plus platinum, whatever you want to call it, $1,300 phones, $2,000 phones, well, the big innovation here is Apple Intelligence, which will only be available in English at release, and it won't even actually be fully functional yet. The big question is, will consumers pay up for a new iPhone that has Apple Intelligence? So far, all the indicators and all the consumer product studies that have been done have found that consumers are actually turned off by the prospect of AI, when somebody sees 2 different products that are almost identical and one of them is labeled with artificial intelligence or AI technology, they're more likely to buy the one that isn't labeled like that. So will Apple Intelligence be enough to rejuice iPhone sales? I don't know. iPhone sales have been down year over year for 2 consecutive quarters. Apple's revenue was down 2% year over year in their most recent quarter, and yet somehow Apple stock is up 19% year to date, almost entirely on hopes that consumers will pay up for this AI phone. We'll see if that happens today. Today is the big unveil for Apple's iPhone 16. We also got news out of Boeing this morning. They've reached a tentative deal with the International Association of Machinists and Aerospace Workers, or the IAM, for a 25% raise over the next 4 years. That deal will avoid a strike, which is something that was hampering Boeing stock, along with a slew of other things, obviously. They also, as part of this deal, Boeing has committed to build the replacement for the 737 in the Pacific Northwest, where the union is housed, although they don't have any actual concrete plans to build that plane just yet. If it happens in the next 4 years during this contract period, it would have to be in the Pacific Northwest. So Boeing stock is doing pretty good here this morning. Also going on, guys, Pay attention, you student loan borrowers out there. Student loan reporting, delinquency reporting is coming back at the end of this month. You may recall the return of student loan payments is almost a year old. That started last year in October. But then the Biden administration came out and said, we are going to report or require the Department of Education to not report non-payment for another year. So even though you've been required to make payments for this whole time since October, if you hadn't made payments, nothing happened to you. Well, that is up at the end of this month. And in October, they will start reporting that delinquency again. It's estimated that as many as 10 million student loan borrowers in the United States are currently delinquent. Pay attention, guys. You have until the end of the month before that starts to ding your credit. All right, why don't we shrink my big melon of a head and let's see what's going on in markets this morning. Don't forget that like button and that subscribe button if you're new here. Really helps out with the YouTube algorithm. So come and have your coffee with the melon heads every morning as we go through markets. The S&P is up pretty nice this morning, 38 points or 0.72% higher. We were a little worried on Friday about what might happen in Japan because the setup was very similar to that early August setup that led to the bloodbath in markets on August 5th. Initially, last night when Japanese markets opened, they were down big, as much as 3% at one point. So it looked like we might be heading in that direction. But Japanese markets were able to reverse, and now it looks like U.S. stocks are set to open deep in the green here, up 0.7% for the S&P. The Dow, meanwhile, is up 294 points ahead of the open, 0.73% higher, and the NASDAQ is leading the way higher, up 0.77% or 141 points in the green for the NASDAQ. So stocks are up pretty much across the board this morning. And we've got a stronger dollar once again, 101.62 for the Dixie. That's up 45 basis points. So we've got the dollar continuing to strengthen off of that bottom of around 100 that we saw last week. And just want to do a Japan watch real quick. Again, we've been watching this one pretty closely. Last week, we were watching the decline in this chart, which is actually a strengthening of the yen. When you see USD JPY moving lower, that's the yen strengthening. Although this morning, the yen is actually a little bit weaker. We've got a green candle here, so that is somewhat alleviating the fears of a spike in the VIX and the unwind of the carry trade here. A little bit of green on the USD JPY chart. And Japanese stocks last night, they did close down 175 points for the Nikkei, albeit that was only 0.48% lower. At one point last night, the Japanese stock market was down 3%. It was looking like we might be headed towards a repeat of August 5th, but then the Japanese market was able to stage that reversal. So stocks here in the States are doing pretty well off of that. Looking at the bond market, looks like we got yields are up pretty much across the board this morning. 30-year Treasury, 4.038. That's up almost 2 basis points. The 10-year Treasury, 3.73. That's up 2.5 points. The 2 years at 3.679, up almost 3 points. And the 1 month is at 5.156. That's up about a half point this morning. So yields are largely higher. Looking over at the commodities board, we've got gold back above $2,500 for spot, 2502.59. That's up almost $5 or 0.2% this morning. Spot silver is at $28.18. That's up 26 cents or 0.95%. We've got copper's up 1.4%. Platinum is up 3%. Palladium's up almost 3.5%. And WTI crude oil for October delivery at $67.92. That's up about a quarter here or 0.37%. Now, let's talk for a minute about oil because we got this one in Trafigura this morning. Trafigura says OPEC plus policy dilemma prompts confused message. Reminder, guys, a dilemma is not a problem. A problem has a solution. A dilemma is a choice between two equally bad outcomes, and that is the situation OPEC plus finds themselves in. OPEC Plus is facing a dilemma when it comes to reconciling the group's goals with what the market needs, and the oil cartel is sending a confused message, according to one of the world's top crude traders. The group, led by Saudi Arabia and Russia, delayed easing supply curbs last week, but now needs to pick which way it wants to go ahead of next year. Given outlook for balances was not great, Ben Luckrock, global head of oil at Trafigura, told traders and executives gathered at APEC 2024, a conference hosted by S&P Global. The Organization of Petroleum Exporting Countries and its allies will be holding supplies in a bid to prop up prices, but that's seen the group losing market share to rivals, including U.S. shale producers, even as its own members' spare capacity goes unused. Meanwhile, despite the now extended curbs, oil prices have remained under pressure on concerns about slowing global consumption, with Brent threatening to slump back below $70 a barrel. Luckock said that oil market wanted to know that if prices went back up, OPEC was not going to bring those barrels back, or would bring them back much more slowly. The group needed to give the market confidence, as the volumes weren't needed as present. The International Energy Agency said in August that global balances would flip to a surplus in the fourth quarter should OPEC stick to its plan to return production. The Paris-based body is set to update that outlook later this week. Goldman Sachs analyst Dan Stuyven told the conference that while a potential price war between OPEC Plus and U.S. shale producers was unlikely, oil's so-called floor price may be shifting from about $75, $80 down towards $70. That's the estimated long-run shale break-even price. Now, that last paragraph is important there because they're talking about unlikely here, but they're mentioning the prospects of a potential price war between OPEC Plus and U.S. shale. That would be like a repeat of 2015, the last time Saudi Arabia went to war with American oil producers. They flooded the market with crude oil supply. They crashed the price of oil down into the 20s. And of course, that put a lot of U.S. shale producers out of business. It really hurt U.S. oil production, but at the same time, it was incredibly expensive for OPEC. The Saudi Arabians were just burning through their cash reserves, selling oil at a loss. It really hurt their finances. So nobody wins in a price war. And at the end of the day, once Saudi Arabia gave up on the price war and started cutting back production again, the U.S. shale producers just started to come right back online and regain the market share. So it was really a very expensive exercise for Saudi Arabia. It was very painful for the U.S., but the Saudis were not able to recapture market share. And so now we're sitting here saying, will they do it again? It didn't really work last time, so I don't think so, but they're at least mentioning the prospects of that. Now, even though the Saudis and the Russians are limiting production here, U.S. production keeps growing, so America is capturing market share here. And the oil price is now in the high 60s again, trading at $67.83 for WTI crude here, the new low of the year. But keep an eye on oil markets, guys. Even though there's a lot of supply disruption going on, the demand destruction caused by the economic slowdown globally is just overpowering that, taking oil prices lower. And let's check in with Bitcoin real quick. Bitcoin is up a little bit this morning, $427 higher as priced on Coinbase, 55,313. Bitcoin has been struggling since basically the beginning of August, the end of July. So not looking so good here this morning either, although up on the morning. Now let's talk about Big Lots. Discount retailer Big Lots files for bankruptcy. Furniture and home decor chain becomes the latest retail casualty of fall in consumer spending. It's the best economy ever. Remember that as we talk about a big retailer going bankrupt. U.S. discount retail chain Big Lots filed for bankruptcy and agreed to sell its business to an affiliate of private equity firm Nexus Capital Management, becoming the latest retail casualty as consumers reined in spending after a post-pandemic surge. The Columbus, Ohio-based company named Nexus as its proposed stalking horse bidder after filing for Chapter 11 protection Monday in the U.S. bankruptcy court in Delaware. The proposed deal, subject to higher offers and other conditions, is expected to close in the fourth quarter, it said. Trading shares of Big Lots was halted on the New York Stock Exchange following the announcement. The furniture and home decor discount retailer has largely posted consecutive quarterly losses since 2022, leading to numerous store closures. Big Lots operated more than 1,300 stores in the U.S. as of May, according to a recent SEC filing. That's down from 1,425 in early 2023. So consumers cutting back their spending big time. Spending, they just have less money, right? By the time they're done paying for more expensive food and more expensive rent and more expensive utilities, there's nothing left to shop at Big Lots. And so Big Lots going bankrupt here. That stock down 40% before trading was halted pre-market here. So Big Lots shares, looks like this one is probably heading to zero. Now let's talk about deflation in China. Check out this chart, guys. This is China's producer price index. And you'll notice this thing has been negative for the entirety of the last year. Most recent reading came in yesterday at negative 1.8. China's producer prices shrank by 1.8% year over year in August, steeper than the 0.8% drop in the previous month and steeper than market forecasts of a 1.4% fall. It marked the 23rd straight month of producer deflation and the highest figure since April due to persistently weak domestic demand and the downward trend of some global commodity prices. They go on to list the price of pretty much every category that fell here, guys. But again, put this one in the same category of global recession along with that oil chart that shows even though oil supplies are being threatened by geopolitical risk, the situation in Libya, and production curbs by OPEC Plus, oil prices still fall. And of course, that is translating into producer deflation in China. 23 of the last 24 months have been negative numbers. Now, China did see a little bit of consumer inflation here, 0.6%. China's annual inflation rate edged up to 0.6% in August of 2024 from 0.5% in July, falling short of market forecasts for 0.7%. But still, it was the highest print since February, marking the 7th straight month of consumer inflation amid supply issues due to flaming heat and pouring rains. So we've got producer deflation and just a little bit of consumer inflation. And guys, I would just add, as always, these are government statistics. And if you think the government statistics here in the United States are bad, well, in China, it's a whole different breed. So you got to take all these with a grain of salt. I'm more inclined to believe those producer price numbers because the amount of debt going bad in China with the property crisis is just so big. I'm having a hard time believing any prices are going up in that country. And let's talk about this one in Bloomberg here. China's deflationary spiral is now entering a dangerous new stage. When you're 30 trillion in debt in the property sector, deflation is a death sentence. Deflation stalking China since last year is now showing signs of spiraling, threatening to worsen the outlook for the world's second largest economy and raising calls for immediate policy action. Data released on Monday confirmed that apart from food costs, consumer price growth barely registered in large swaths of the economy at a time when incomes are sagging. A broader measure of economy-wide prices known as the gross domestic product deflator will likely extend its current 5-quarter drop in 2025, according to Bloomberg economics and analysts at banks, including BNP Paribas. That would amount to China's longest streak of deflation since data began in 1993. We are definitely in deflation and probably going through a second stage of deflation, said Robin Xing, chief China economist at Morgan Stanley, citing evidence from wage decreases. Experience from Japan suggests that the longer deflation drags on, the more stimulus China will eventually need to break the debt deflation challenge. And of course, this is those Keynesian economists over at Bloomberg, guys. Everything always just looks the same to them. Every problem can be solved by money printing. And they're saying, hey, if China goes into deflation, the longer this goes, they're going to have to pull a Japan and start doing modern monetary theory. Well, no, they don't have to do that. They could just default on the debt. It would be incredibly painful. But look at what's going on in Japan and what that might cause around the world. It's hard to argue that the Japan route is the better course of action here. But to a hammer, everything looks like nails. To a Keynesian, everything looks like a problem that can be solved by printing money. Now let's talk about Apple, because we have got the new iPhone is getting unveiled today. Apple looks to AI to end the iPhone slump. Meanwhile, artificial intelligence has yet to spur a wave of upgrades for other smartphone makers because consumers just aren't that excited about AI. I hate to break it to you. Outside of Silicon Valley, nobody really cares about AI. Will artificial intelligence help Apple sell more iPhones? That question looms over the tech giant on Monday as it holds its annual fall product event where it's set to unveil a new generation of iPhones. The iPhone 16 lineup isn't expected to have many new hardware features beyond the usual faster chips and improved cameras. Instead, Apple is expected to promote its new AI feature called Apple Intelligence as a main selling point. So far, consumers have yet to embrace AI capabilities as a primary reason to upgrade. Apple's leading smartphone rival Samsung has heavily promoted its latest device's AI capabilities. AI was only a minor selling point for carriers after the initial batch of sales, according to surveys Bay Street research conducted at U.S. carrier stores. Another recent survey showed that 7% of consumers had a very high inclination to buy a smartphone based on AI features, according to research firm Canalys. AI hasn't resonated yet with the masses, says Chris Maldonado, principal analyst at Bay Street Research, which studied the smartphone market. Now, I would add this data here. Apple's last big iPhone hit was in 2021 when sales rose 39% compared with the prior year. I would also add in 2021, everybody was locked inside and everybody was getting regular stimmy checks from the government. So money was flush and everybody upgraded their iPhone. Sales, however, have fallen in the past 2 quarters compared with the same period a year earlier, and revenue fell by more than 2% in the 12 months that ended in September of 2023, its most recent fiscal year. Now, I would remind you guys about this study, and this one is a couple of weeks old. This came out on August 10th, but this study said that AI labeling lowers customer trust, even as tech giants pour billions of dollars into what they herald as humanity's new frontier. A recent study shows that tacking the AI label on products may actually drive people away. It's amazing. You got a $16 trillion stock bubble has sprung up around this technology, and yet the label turns people off. Even as tech giants pour billions of dollars into what they herald as humanity's new frontier, a recent study shows that tacking the AI label onto products may actually drive people away. A study published in the Journal of Hospitality and Marketing and Management in June found that describing a product as using AI lowers a customer's intention to buy it. Researchers sampled participants across various age groups and showed them the same products. The only difference between them, one was described as high tech and the other as using AI or artificial intelligence. We looked at vacuum cleaners, TVs, consumer services, health services, said Dogan Gursoy, one of the study's authors and the Taco Bell Distinguished Professor of Hospitality Business Management at Washington State University, in an interview with CNN. In every single case, the intention to buy or use the product or service was significantly lower whenever we mentioned AI in the product description. Despite AI's rapid advancement in recent months, the study highlights consumers' hesitance to incorporate AI into their daily lives, a marked divergence from the enthusiasm driving innovations in big tech. Now, this is kind of interesting here. So AI is generally speaking a turnoff for consumers when they see the labeling. But when we're talking about iPhone customers tend to be more fans of tech, more gadgety, right? So will this mistrust of AI labeling translate into lower iPhone sales? I don't know. AI is going to be, the average iPhone shopper is different than the average TV shopper or the average vacuum cleaner shopper. But the point is, so far, every product that has had an AI label slapped on it, it has not had any measurable impact in sales, including Samsung's phones have not seen any measurable impact in sales from that AI label. Will it be different for Apple? We'll find out in the next few months, I guess. Apple stock today, though, down 0.01% here, trading at $220.77. Now, guys, I would point out that year to date, Apple stock is up 19%. And that's after 2 consecutive quarters of negative iPhone sales, revenue down 2% in the most recent quarter. So somehow Apple has been able to convince the stock market that this AI phone is going to be a big seller here. And the stock has risen 20% despite falling revenue and falling iPhone sales. Will that translate? I don't know. Will it be enough? So far, anything you put AI on does not sell as well as something not labeled AI. Apple stockholders seem convinced the AI label is going to move iPhones. Also going on this morning, Boeing shares rise after a tentative labor deal that could avert a major strike. Finally, we got some good news for Boeing. Mark the date and time. When's the last time Boeing had some good news in the press here? Wow, somebody pinched me. Am I dreaming? Boeing did something right. Boeing shares rose 5% in pre-market trading on Monday after the plane maker reached a tentative deal with union representing more than 32,000 workers in the United States Pacific Northwest that could avoid a possible strike later this week. The proposed 4-year contract was hailed by the union as the best it had ever negotiated. It's also an early win for new Boeing CEO Kelly Ortberg, who is tasked with turning around the struggling plane maker. As part of the agreement, Boeing has committed to building a replacement for its workhorse 737 at its Pacific Northwest facilities if the project is started during the 4-year period of the labor contract, though the plane maker has not yet announced the new jet. The terms include a general wage increase of 25% over 4 years. That's below the 40% wage hike demanded by the International Association of Machinists and Aerospace Workers Union, signaling its recognition of Boeing's difficult financial position. So it's not quite as impressive as some of those big raises we saw last year. Remember last year with all the airline pilots and the railroad workers and the UPS drivers, there was a lot of big organized labor threats of strikes last year. Some actually went all the way to a strike. And most of them came out with something like a 40% wage increase. All right. Now, those 40% wage increases were followed up just weeks later with announcements of mass layoffs. So it's possible here that the Boeing workers are saying, look, guys, if we hold firm for 40%, maybe we get it. And then we're all going to lose our jobs anyway, because Boeing has a lot of problems. So they settled for a 25% raise over 4 years, which is still a nice raise. But again, that's over the next 4 years. And considering what the cost of living has done in the previous 4 years, well, it's better than nothing. But still, I think Boeing workers barely treading water here versus what their cost of living has done. But Boeing stock this morning is, liking this news, up 3.4% ahead of the opening bell, trading at $162.96. That's up about $5.20 here. And guys, you student loan borrowers, college students out there, pay attention to this one, because that bill is coming due eventually. Americans face a credit hit as student debt goes delinquent again. Late payments will be reported to credit bureaus from October. Millions of Americans are falling behind on student loan payments a year after the pandemic freeze ended, and soon that will start hurting their credit scores. In a report last month, the Government Accountability Office estimated that about 10 million borrowers, more than 1/4 of the total, were behind on payments as of the end of January. About 2/3 of them were more than 3 months late, meaning they'd normally be classified as seriously delinquent. Right now, those borrowers are shielded from taking a hit on credit scores because the Biden administration ordered a 1-year moratorium starting from the post-pandemic resumption last year, during which missed student payments can't be included in credit reports. So I've seen estimates as high as 40% of student loan borrowers have not been making their payments, although that estimate is pretty old. They're saying here as much as a quarter are behind. That's according to the Government Accountability Office. We have no way of knowing because this data is not being reported to the credit bureaus. And I would add that is artificially propping up consumer spending in our economy and thus making GDP appear stronger than it really is, because you've got a bunch of people that are supposed to be paying their bills. The government said, oh, don't worry, you don't have to pay your bills. Go buy more consumer crap instead. And so it's artificially juking consumer spending and making GDP look stronger than it really is. And last one, I want to send a shout out to Macro Edge, my friends over there. They sent this one over the weekend. I get a lot of questions about credit unions on this channel, and I don't follow credit unions that closely. And so that's why I wanted to bring this one up. They posted this one over the weekend. We are seeing growing signs of concern in loan performance, capital, and earnings across the system and at specific institutions. That's according to the chairman of the National Credit Union Association or Administration. They released one of their annual reports over the last few days, and this is a kind of alarming soundbite here, talking about rising delinquencies, loan performance, capitals being stressed. So it's nothing too alarming here, nothing that I think you really need to worry about, guys, but it does show that credit unions are not immune to the problems that have been facing regional banks. And I would also add that I think credit unions have a lopsided exposure to auto loans. That's been one of their hallmark businesses over the years. And auto loans, there just hasn't been many auto sales. Inventory is piling up at car dealers around the country. And so I think that's probably contributing to maybe some of the deteriorating loan performance. Repos are up in the automotive sector, and it's probably hurting their earnings as well. So keep an eye on that. And that is all I got for you guys this morning. I want to say thank you so much to everybody for having your coffee with the Melonheads this morning. Thank you to all my Melonheads and magnanimous Melonheads on Patreon and YouTube. Thank you guys so much for everything you do for the channel. Also, hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.